It has been 3 years since the Wuhan virus triggered lockdowns. Businesses were struggling to survive. What are things looking like now? How are companies faring? And what about people's spending habits? Have you heard about the concept of revenge spending? Why is that being talked about now? Our next report telling you more.
If you have invested in cryptocurrency, we have some news for you. According to a report from Standard Chartered, Bitcoin could hit $100,000 by the end of 2024. It's believed that Bitcoin could gain from various factors, be it from the recent turmoil in the banking sector or from the improved profitability of crypto mining. Bitcoin hit the $30,000 mark in April for the first time in 10 months. Its gains represent a partial recovery after trillions of dollars were wiped from the crypto sector in 2022. But it's not just the cryptocurrency Bitcoin which is making gains. Here's what else is happening. LVMH, the parent company of Louis Vuitton, Hennessy, as well as brands including Givenchy, Bulgari and Sephora stores, has now become the first European company with a market value above $500 billion. The success of LVMH, which owns 75 luxury brands, is due to a growing demand from the wealthiest parts of the society. The Paris-based luxury retailer has been able to reach that milestone on robust first quarter sales in China and a stronger euro. LVMH shares hit a record high following the results. The company reported 17% rise in first quarter sales as compared to quarter 1, 2022, crossing $500 billion in market valuation only recently, in the process becoming the first European firm to cross the milestone. Powered by a surge in first quarter sales, the achievement comes less than 2 weeks after LVMH joined the ranks of world's 10 biggest companies, according to a Bloomberg report last week. LVMH is shifting its resources out of Hong Kong as it wants to focus more of its investment in burgeoning metropolises. For example, in Shanghai, Chengdu, Guangzhou and Shenzhen. Interestingly, the move taken by the luxury brand comes as China opens up its economy. According to Bain & Company, China's wealthiest consumers will continue to splurge on luxury items like designer bags and watches, even as middle-class shoppers refrain from buying big-ticket items, unnerved by worries about their job prospects and wages. The global consultancy said in its latest report on China's luxury market that the top 2% of Chinese spenders, accounting for more than 40% of spending on luxury items, will be a key driver of market growth in 2023. Last year, across China, lockdown measures and standstill orders to guard against the spread of COVID-19 prevented millions of consumers from buying long-coveted personal care products or leather shoes. But as shopping malls grappled with a decline in foot traffic, sales skewed towards very wealthy customers. Last year, spending on luxury goods in China is estimated to have hit $62.65 billion, down by 9.6% from 2021, owing to the more stringent pandemic curbs. Bain & Co. forecasts the consumption of luxury items this year will re-enter the positive territory, after Beijing was forced to shift from its stifling zero-COVID strategy after growing frustration and protests on the ground. Bureau Report, WION World is One.
WION now available in your country. Download the app now. Get all the updates on the move.